watching BNN Bloomberg. I'm John Ehrlichman. We have seen stocks in rally mode on this Tuesday morning. Let's head to New York now. Check in with Bloomberg's Kriti Gupta, who's been tracking the U.S. markets. And Kriti, we started today by talking about how the idea of lockdowns lifting was fueling equities. But, you know, there's another storyline playing out, and it has to do with U.S.-China tensions, which yesterday we said maybe that was a concern for the markets. Now there seems to be a different view. What's going on?
That's right. So like you said, first off, this idea of reopening the economy, of course, that is playing into the mood this morning, yesterday into the close. We did see a bit of optimism as we saw Governor of California really come out and say, well, parts of California could reopen. Remember, California is one of the hardest places hit by the virus in this country. So some good news there, obviously adding to some momentum this morning. But of course, a big part of this is also the political story. What is going on between the U.S. and China? Over the past few days, we've seen some of those tensions flare back up. This morning, actually seeing a headline that the U.S. Is considering a extension of the tariff exclusions from China. So that's actually a very good sign. That is coming in contrast to some criticism from Chinese media on Secretary of State Mike Pompeo. So some mixed emotions on that front. Nevertheless, you are seeing stocks rally today. Despite some economic data coming out, we did see trade balance in March really plunge a record low for exports. So very interesting dynamic there, but once again, the stocks don't seem to care this morning, still rallying.
Well, and let's talk about one sector in particular, because here in Canadian trading, we've already seen energy stocks as a group up about 3%, and we're seeing a similar percentage move for the S&P 500. So talk a little bit about this optimism surrounding energy this morning.
That's right. You're seeing oil prices gain just a little bit, and you also saw Brent hop over that $30 a barrel mark, a very key level because we've seen oil in the 20s. So you're seeing that gain. A lot of that's coming from what the Permian drillers are doing. So remember, in the middle of the United States, you have a good chunk of the oil and gas business. You're seeing a lot of those names cut back on their productions. The big oil names, Exxon, Chevron, ConocoPhillips, vowing to cut 660,000 barrels per day until June. So that's actually a very good sign for oil as a whole. Once again, this comes back down to supply and demand dynamics. When you see demand take this big of a hit, these changes in supply could make a very big difference. This is also a very good sign as we saw the Texas Railroad Commissioner, Ryan Sitton, come out and say, well, those ideas of curbing production, of putting quotas in, that idea is no longer viable. What is a good sign, though, is these companies are taking on their own approach to do that. So therefore, you are seeing oil rally this morning and, of course, the energy names along with it.
You know, investors have to do quite a dance these days because short term, there are some major issues out there. I mean, we talked about Air Canada yesterday saying it's going to take upwards of 3 years to get back to some kind of normal. It was interesting. Carnival started to try to sort of paint a picture of how they're going to get their cruise ships up and running again. And then today, Disney is set to report its quarterly results. Now, in early trading, the stock is down. And boy, what a lesson we're going to get in how this company is navigating the COVID-19 storm after the bell tonight.
That's right. Disney, like you said, reporting after the bell, a really interesting story. Disney's always been one of those media companies, one of those tech companies that's kind of stood out in a million and one ways. Remember, they have a very diversified business. A big part of that coming from travel and tourism, those Disney cruise lines, those Disney theme parks, of course, one of those most visited places in the world. Now, of course, turning into ghost towns. What's important, though, is to note that ESPN, one of Disney's subsidiaries, is also taking a fairly big hit as we see sports kind of take a bit of a pause here. So what's important to note is how is this going to affect Disney's bottom line? Remember, Disney Plus, though, one of Netflix's big competitors, did see a huge surge in viewership and subscribing numbers. So you saw 50 million users just last month. That could actually work in Disney's favor. We did see Netflix really rally on kind of that pandemic news. If you're sitting at home, what are you going to watch? And Netflix, Disney Plus, those are the kind of names that come to mind. That being said, Disney did, however, lose one of its long-term bulls. An analyst at MoffettNathanson, actually, who has been vouching for the stock for 10 years, downgrading the stock from a buy to a neutral, saying their downgrade is an admission of just how bad the economy is, a kind of a sign of the times. So in Disney's earnings call after the bell, remember not just to watch what's going on with Disney, but perhaps some broader signs of what could change for the broader economy and what the next few months could look like.
All right, Kriti, thanks very much. Helpful breakdown as always. That's Kriti Gupta joining us from New York with the latest on some of the U.S. stock movers. So we'll watch Disney, obviously, when it comes to going out. Those parts of the business not doing well, but some of us curling up, I suppose, in bed, maybe watching Disney Plus. Even though we're curling up in bed, though, it doesn't mean we're going out and buying new mattresses. Sleep Country coming out with its quarterly results, and COVID-19 has certainly